Hello and welcome to the Business Standard Morning Show. I'm Minu Sandhu. Let's take a look at the stories for the day.
रामू दो चाय दे यार।
अरे नहीं यार, एक चाय कॉफी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का home loan. I agree with you.
SBI is the banker to every Indian.
Summer is here, but lemons are virtually out of reach. Lemon is selling for around 350 rupees a kg in the wholesale market. Prices of other vegetables are also going up. It's one of the worrisome signs that inflation this time round presents. So should Indians be resigned to the fact that food prices and retail inflation will continue to stay high? Or will the rain gods offer some relief? Let's find out.
Did you have a laugh seeing all the lemon-themed memes on social media? Lemon prices have risen sharply, just like the rates of petrol, diesel and LPG. A fortnight ago, lemons were retailing at about 50 to 100 rupees per kg. Blame rising fuel prices for this situation and the sudden explosion in lemon jokes. But it's no laughing matter. According to a local circles survey, about 9 out of every 10 Indian households have felt the pinch of rising vegetable prices in the past 30 days. 37% of respondents said that they were experiencing an increased spending of over 25% on vegetables. According to another survey, around 24% of Indian households have been forced to reduce their consumption of edible oils due to a sharp spike in retail rates. Around 29% have downgraded their cooking oil to affordable alternatives. Amid all of this, the India Meteorological Department has predicted that cumulative southwest monsoon over the country as a whole is expected to be normal in 2022. SkyMet too indicated that southwest monsoon in 2022 was expected to be normal. This should come as a relief to millions of Indians. A good southwest monsoon is supposed to boost agriculture production, thereby easing inflationary concerns. However, the devil lies in the details. IMD's forecast showed that the monsoon could be largely above normal in most parts of India, barring pockets of northeast India, Jammu and Kashmir, Rajasthan, Haryana, Punjab, Tamil Nadu, Kerala, and Ladakh. Meanwhile, SkyMet said that the first half of the southwest monsoon is expected to fare better than the latter half of the season. Speaking to Business Standard, ICRIER's Ashok Gulati said that a normal monsoon might bring some cooling effect on vegetables grown within the country. However, imported inflation, such as in the case of edible oils, would not be impacted. Uncertainty surrounding the Russia-Ukraine conflict would continue to cause inflationary pressure. Despite a normal monsoon, inflation was expected to stay in the 6% plus band, if not higher.
Geographic spread and the monthly spread, both of which I think SkyMet and IMD have highlighted within the text, and which states very clearly that not every state would be getting as robust rains as we predicted to be. Between the 4 months, there is a clear indication that the latter part of the monsoon period, and that is June to September, so we're looking at August and September months, wherein at least 49% of the monsoon rain comes. Those are the 2 months where, because of negative IOD, we are predicting, at least that's what the scientists are predicting, the rainfall may not be as robust. This happened last year. This is also happening this year. And therefore, I think what we understand is, so while the aggregate number is good, there is a lot of information camouflaged within. Third thing is, and that is critical, is the dry spells. Both of them have acknowledged that there would be dry spells. IPCC report continues to raise these alarms that we will have changes in the pattern of precipitation, and these longer dry spells has a huge negative negative impact on the crop. Plus, what is really critical is the temperature rising. March has been unprecedentedly hot, because of which yields are getting impacted, particularly in case of wheat, where we see shriveled grains already. Onion is getting affected by a lot of pests, and therefore yield losses are already coming in. So with lower monsoons and rising temperatures, yield may be at loss. So therefore, the picture doesn't look as quite nice as we'd expect it to be. The inflation in the coming year is likely to stay high, and for global reason, because of crude, because of monsoon rains now, I think we need to be ready for higher rates of inflation in this year.
If the anecdotal reports and surveys aren't enough, here are the official numbers. The headline inflation rate has remained above the 6% mark for 3 consecutive months. Analysts were surprised by the consumer price index based inflation rate for March. At 6.95%, the rate stood at a 17-month high, and it is likely to remain elevated in the coming months given its broad-based nature. Food items primarily drove the rise in retail inflation in March. The Consumer Food Price Index rose to 7.68% from 5.85% the month before. The fact that core inflation rose to 6.4% in March should also raise red flags. Given the limited projected relief from the monsoon and March inflation data, should the Monetary Policy Committee consider increasing rates at a faster pace than what was expected a few weeks ago?
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
While we wait for monsoon to tame the surging inflation, let's take a trip to the new Museum of Prime Ministers. Prime Minister Narendra Modi inaugurated the Pradhan Mantri Sangrahalaya, which showcases the stories of how former Prime Ministers of independent India navigated the nation through different challenges during the 10 years. Here's what visitors can expect to see and experience at the museum.
Prime Minister Narendra Modi on Thursday inaugurated the Pradhan Mantri Sangrahalaya, or the Museum of Prime Ministers in New Delhi, which tells the story of India after independence through the lives and contributions of all the 14 former Prime Ministers. He also bought the first ticket of the museum. Sanctioned in 2018, it has been built on a 10,000 square meter land adjacent to the Nehru Memorial Museum and Library at Teen Murti Bhavan for 271 crore rupees. The museum features 43 galleries, starting from displays on freedom struggle and the framing of the constitution. It goes on to showcase the story of how Prime Ministers of India navigated the country through various challenges and ensured all-around progress. The erstwhile Nehru Museum now has an updated, technologically advanced display on the life and contribution of the nation's first Prime Minister. A number of gifts received by Pandit Jawaharlal Nehru from all over the world but not exhibited so far have also been put on display. The Sangrahalaya will showcase archival material, personal items, memorabilia, speeches of Prime Ministers, and anecdotal representation of ideologies and different aspects of their lives in a thematic format. Information for the museum was collected through repositories with institutions such as Prasar Bharati, Doordarshan, Films Division, Sansad TV, Ministry of Defence, Indian and foreign media houses, as well as news agencies. The design of the museum building is inspired by the story of rising India, shaped and molded at the hands of its leaders. The design incorporates sustainable and energy conservation practices. No tree has been felled or transplanted during the course of the work on the project. The logo of the Pradhan Mantri Sangrahalaya represents the hands of the people of India holding the Dharma Chakra, symbolizing the nation and democracy. Holograms, virtual reality, augmented reality, multi-touch, multimedia, interactive kiosks, computerized kinetic sculptures, smartphone applications, interactive screens, and experiential installations, among others, have been leveraged to make the exhibition content to become interactive and engaging for visitors around the world. The museum also celebrates the making of the Constitution of India and will apprise visitors about the men and women of the Constituent Assembly who steered the transformation of India into a modern republic. The museum will be thrown open to the public from April 21.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
From New Delhi's Tirumurti complex, let's now turn to the IT campuses where the fourth quarter corporate earnings season began this week with TCS and Infosys announcing their results. The companies had upbeat revenue commentary for FY23, but they also reported all-time high attrition rates, reflecting supply-side challenges. Our next report takes stock of the sector's health and analyzes what the results of the country's top 2 IT companies signal for the industry.
IT majors Tata Consultancy Services and Infosys started the Q4 results season for large cap companies this week. While TCS posted steady growth aided by mega deal wins, Infosys missed analyst estimates on slower revenue, fall in profit, and a significant dip in margins. However, both the companies said they foresee a resilient demand environment in FY23 and a strong deal pipeline, but admitted that margins will continue to be pressured. For instance, Infosys margin guidance at 21-23% for FY23 is 100 BPS lower than its earlier guidance in FY22. Going ahead, Nomura sees the company's margins dropping in the new fiscal as headwinds of high fresher hiring, competitive salary increments, and efforts to further drop utilization towards its comfort zone of 85% from 87% in Q4 will be front-loaded for Infosys in FY23. Independent market analyst Ambarish Beliga believes that going ahead, the trend of subdued margins could be mirrored across the entire IT pack, including mid-sized companies.
For my expectations of the TCS earnings, I think the broad numbers, especially on the top line as well as the margin front, was a bit of a mess. However, the management commentary on the demand environment continues to be strong, and I think this is what helped the stock hold on in a weak market. And the deal flow of about $11.3 billion, I think this was a record high, and I think this was the highlight of the earnings. And along with this was the record employee addition, which is clearly based on higher visibility on the cloud-led spending. And I think this confirms a robust environment. However, on the negative side, it is expected that the IT budgets going ahead, at least for the next 2 to 3 quarters, could take a hit, especially in Europe, in light of the Russia-Ukraine conflict. And we've also seen a higher attrition, though we have seen a huge addition to the employees, but we've also seen higher attrition. So going ahead, clearly margins could remain under pressure, could in fact be below the management guided range of about 26 to 28%. I think it will be closer to 25%. And this could be the similar trend across the industry, and more so for the mid-sized IT companies. So it seems that investors could remain a bit cautious on this space for the next 1 or 2 quarters.
Brokerage HSBC Global also sees limited upside to the sector's revenues in FY23 and 24 as margin pressures remain more precarious than the top line. The brokerage believes that while some moderation in wage hikes will occur in FY23, the tailwinds will be limited as travel and other costs are likely to come back to some extent. That said, it has slashed its valuation multiples on Infosys and TCS by 10%, along with reducing the target prices. It has further downgraded its rating on Infosys from buy to hold, while reducing FY23 and FY24 earnings estimates for TCS by 4.6% and 4% respectively. At the index level, analysts at ICICI Securities expect that the Nifty IT index, which has been resilient so far this year despite a weak macro environment, may soon begin underperforming the Nifty 50 due to slowing revenue growth, margin woes, and elevated valuations. They say Nifty IT index might end up with negative returns in FY23 and multiples for the sector are unlikely to re-rate given the impending margin issues and a potential slowdown in discretionary spends due to macro reasons. Additionally, rising interest rates are driving up the cost of equity and should put pressure on stock prices. That said, markets will remain closed today on account of Good Friday holiday. When trading resumes on Monday, stock action for Infosys will be eyed along with that of banking major HDFC Bank, which will post its Q4 results tomorrow.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
On March 16th, the Supreme Court said that one rank, one pension in the armed forces is a policy decision that was not arbitrary. It upheld the one rank, one pension scheme launched in 2015 and declined to interfere with the policy, which has been a long-standing demand of the Indian Armed Forces and its veterans. Our next report takes a deep dive into the scheme.
The Supreme Court last month upheld the one rank, one pension scheme for armed forces personnel. The court said it did not find any constitutional infirmity in the OROP principle and the government's notification dated November 7, 2015. One rank, one pension implies a uniform pension for defense personnel retiring in the same rank with the same length of service, regardless of their date of retirement. In view of the need of the defense forces to maintain physical fitness, efficiency, and effectiveness, personnel retire at an early age compared to other agencies of the government. A sepoy in the army, an equivalent rank in Navy and Air Force, retire after 17 to 19 years of service, and officers retire before attaining the age of 60 years. Before the implementation of OROP, the computation of pension was linked to the pay drawn by the personnel in a particular pay scale at the time of his or her retirement. Pay scales are revised to the higher side, generally on the recommendation of pay commissions. As such, the personnel retiring after the revision of the pay scales got more pension than those who had already retired. Hence, the gap remained in the pension of the past and present retirees. OROP bridges the gap between the rates of pension of current and past pensioners at periodic intervals. The scheme was implemented with retrospective effect from July 1, 2014, with 2013 as the base year. The armed forces personnel who retired by June 30, 2014 are covered under the scheme. The pension of the past pensioners was refixed on the basis of the pension of retirees of calendar year 2013 and the benefit was effective July 2014. The pension was determined on the basis of the average of minimum and maximum pension of personnel retired in 2013 in the same rank and with the same length of service. The scheme envisages revision of pension once every 5 years. The yearly recurring expenditure on account of OROP is about 7,123 crore rupees. For about 6 years starting from July 2014, the total expenditure was over 42,740 crore rupees.
यार आइसक्रीम खाएं? नहीं यार, कुल्फी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
अरे SBI contactless debit card? I agree.
SBI is the banker to every Indian.
Ex-servicemen in India have been demanding the implementation of the one rank one pension scheme for more than 40 years, but it was finalized only in 2015. As in 2020, more than 2,060,000 Defence Forces pensioners and family pensioners had benefited from the scheme. That's all for today. For more news and analysis, please log into our website www.business-standard.com. We'll also be back tomorrow morning with more. Stay tuned and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.